What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I want to talk about how I make money in the stock market during market crashes. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel, try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description, and of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. If you refer one friend by the end of the month, aka midnight tonight, they're going to give you 30 free fractional shares, and for every friend you refer after that, they're going to give you 15 free fractional shares, and if you refer 3 by midnight tonight, please move fast, they're going to give you all the way up to 15 free shares of Apple. Webull link in the description. Time is running out. Move fast. So today, I wanted to talk about how I make money in the stock market while the stock market is crashing. Now, this is actually in response to a viewer reaching out to me just a couple of days ago. I was sent a message that said, "With inflation running at a 4-decade high, a recession is now the most likely outcome for the economy. How can I grow my portfolio to outpace inflation and maintain a successful long-term strategy? I have been reading of investors making about $250,000 profit in this current crashing market, and I need ideas on how to achieve similar profits." Well, first things first, full disclosure, I can't teach you or anybody how to make $250,000 profits because I have yet to make $250,000 profits myself. Now, from day one to present day, my portfolio overall is up about 24%. So with that percentage, if I made $250,000 profit, that means I would have had to invest over $1 million out of pocket from day one to present day, which I have yet to do. I'm very far from being able to say that, oh, I have $1 million invested. Nope, I am not a millionaire, and I have no ability to teach somebody how to make $250,000 in the stock market because I have not been able to do so. And I'm also not going to use this video as a way to guide anyone in the direction of any particular individual stock. I'm going to be kind of vague because I don't want to steer anybody in the direction of a specific stock because that's something that you have to figure out for yourself. And a lot of the decisions that I've made in the past might not be where we should be focusing our attention or our money today. So anyway, when it comes to making money in the stock market, obviously the market is down right now. Actually, to be honest, to be fair, it's been a pretty strong month, January 2023. Not bad at all, but we're still down heavily from the highs. We spent the entire year last year, all 12 months, moving in a downward direction, just getting deeper and deeper and deeper in the hole, and we closed out the S&P 500 down 16 point something percent. Not the strongest year. Pretty deep in the red. I, however, cannot say that I outpaced inflation last year, but I did beat the market last year. The market was down 16 point something percent, and I was only down 1%. But like I said, from start to present day, even though I was down 1.5%, let's just say, last year, I'm still up about 24% overall. You're going to have good years, you're going to have bad years, you're going to have incredible years, and you're going to have disastrous years. And if you focus on the long term and you keep reminding yourself that the S&P 500 averages a 10% return or 7 to 8% return adjusted for inflation on average, just because it has a 7 to 8% return on average doesn't mean you're going to have a 7 to 8% return every single year. You're going to have some years like last year where you're down 19%. You're going to have some years like the year prior where we were up 21%. It averages out to about 7 to 8% adjusted for inflation with dividends reinvested. So, my primary way of going about investing is by taking the contrarian approach. This is something that I've explained time and time again, but I would say that it's especially relevant right now where people might need a sense of direction. Myself included sometimes. But here's the thing. I like to pay attention to what everybody else is doing. Not so that I can follow the herd, but so that I can stay as far away from the herd as possible. For example, 2020, as soon as everything came crashing down, we actually saw the market rally. And that's because the market is very, 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 heavily leaning on tech, as it's been. Very tech heavy. And tech was really the only thing that was doing well that year. And not only was it doing well, it was doing incredibly well. So tech was keeping the market afloat that year. While everything else was down, it just didn't appear that way because the market was up. A lot of individual stocks were down, a lot of different sectors were down, but tech was just pulling everything up above water. And during that year, people were throwing their life savings into tech. People were throwing their life savings into growth stocks. You want to know what I was doing that year? I was putting everything into the blue chips. I was putting everything into what a lot of people refer to as the grandpa stocks and index funds. I was taking the boring approach. They're like, oh, put it into this meme stock and you have a chance of, becoming a trillionaire overnight. No, that's not what I was looking to do. I'm not looking to become a trillionaire overnight. I'm looking to build long-term, stable, sustainable, generational wealth. So I was putting it into where the discounts were. I was putting it where a lot of people were selling off their positions. A lot of people were liquidating in these certain areas, these certain stocks, in these certain sectors. That's where I was buying. Keep in mind, this was right after the crash. And when everything crashed, it's not like everything just popped right back up. No, most stayed where it was at. It crashed down, and then it just stayed there for a long time. Certain areas, it perked up a little bit, and certain other areas went down even further. But I managed to get some of the biggest, baddest companies on the planet for 20% off, 30% off, 40, 50, 60% off. And I held on. And I'm still holding on. And a majority of the decisions that I made that year in 2020, fast forward to present day, early 2023, I'm up 40%. I'm up 70%. I'm up 200+% on a lot of these decisions. I've had far more wins than losses. Thank God, by the way. I've made far more good decisions than bad decisions. And the bad decisions that I've made weren't even all that bad. I'm down a small amount, small percentage, certain areas. But the overwhelming majority, I'm up. And not only am I up, I'm up by quite a bit. Like I said, 40%, 50%, 100%, 200%. Some more. And I've been taking the contrarian approach. But that was 2020. 2021 and 2022, different story. 2021, actually very similar story. The tech rally just continued. But last year, 2022, tech struggled. As we began to move into the recession and the recession that a lot of people knew was inevitable. I've been saying it since, before the first stimulus check even came out. I don't want to say that I predicted all this, but a lot of what's happening today is exactly what I knew would happen and I said in videos would probably happen. And by the way, while we're on this, just a friendly reminder, please don't forget, you only have a couple hours left to download Webull and fund your account. They're going to give you up to 12 free fractional shares just for doing so. If you refer a friend by midnight tonight, they're going to give you 30 free fractional shares. And for every friend you refer after that until midnight tonight, they're going to give you 15 free fractional shares of some of the most rock-solid companies on the planet: Ford, Coca-Cola, Starbucks, Apple, the list goes on. And if you refer 3 friends by the end of the night, they're going to give you all the way up to 15 free shares of Apple. You're guaranteed at least one, but you have the opportunity of winning all the way up to 15. Please don't pass up on an opportunity. If you don't want the stocks, go and get them anyway. Sell them. Congratulations, now you have the cash to go and buy whatever it is that you want to actually have. Webull link in the description. Time is running out. Please move fast. So now that we're rotating out of tech, and we had been since last year, because remember, we are very, very tech heavy. The stock market leans very heavily on tech. So when tech isn't doing so well, drags the whole market down. A lot of other stocks, however, maybe they're, keeping their head above water a little bit. It just doesn't appear that way because the market was down so heavily. People say, well, how's the market down so heavily? Everything is crashing. Not really. Mostly tech was crashing. Many other sectors did very, very well. The energy sector did phenomenal and is still doing phenomenal. A lot of the blue chips, the consumer staples, the consumer discretionaries, a lot of these different sectors, these different industries have been doing quite well. Or at the very least, not struggling nearly as much as tech was struggling. So when tech is down and people are liquidating their positions and taking that cash and putting into the more, I guess we can call them safe havens, the blue chips, guess what I was doing? I was buying tech 10, 20% off. This year, 2023, we're getting off to a pretty decent start. The market's up. We're moving in the right direction. Tech is continuing to struggle a little bit. So it's something to consider. Putting your eyes on the sectors, the industries that are off of people's radars right now. People follow the trends, people follow the hype, people follow the rally. I pay attention to those things, so I know that I need to stay away from them. Because I don't want to buy overvalued. I want to buy preferably undervalued, but I'm just as happy buying fair valued as well. I don't want to buy into overhyped, overvalued stocks. Or anything, for that matter. Why pay more when you don't need to? Just buy something else instead. Now, it's not just as simple as buy whatever is crashing, obviously, because for obvious reasons. You have to be really, really selective. And you have to figure out what direction we are moving in as a country or even as a world. What direction we're moving in. What's going to make the least amount of sense in the short term, but will, without a doubt, bounce back in the middle to long term. That's how you have to think. And then from there, you take those ideas and figure out who are the biggest players in that space. And then when you figure that out, you have to research those companies. You have to look at the earnings reports. You have to look at the future projections. You have to look at a lot of different things. You have to really crunch the numbers. But here's the thing. You can eliminate all that work altogether and do absolutely no research at all. Zero research. You can put no thought into it in any way, shape, or form and still benefit in the long run by just going with broad market index funds. All of the best stocks in the world, all of the best, most valuable brands on the planet, they're in there. Something that I learned either last year or the year before was don't look for the needle in the haystack, just buy the haystack. The needle's in there. Plenty of needles are in there. So that's the approach that I've been taking for the last year and a half. Much more of an emphasis on broad market index funds. The S&P 500 is currently 4% of my portfolio, and I want it to be 40% of my portfolio. I want that to be the backbone. I want that to be the foundation of my investment portfolio. And yeah, I will continue building onto my positions with individual stocks as well, but I'm not really too worried about that because every last one of the individual stocks that I own also happen to be in these broad market index funds. So you already have them there one way or the other. But index funds, yeah, there's less opportunity for growth because individuals can really explode out of nowhere depending on what's going on. But you also don't have to worry about them collapsing out of nowhere. You don't have to worry about management screwing things up or some defamatory report coming out about somebody that works for the company, then all of a sudden people bail out of that stock, and then all of a sudden you're down 15% because of something that was on the news today. You don't have to worry about any of that. Broad market index fund and chill. That's my approach. That's been my approach for the last year and a half, and that will continue to be my approach, while also simultaneously continuing to buy into whatever is off of everybody else's radar. If tech is moving in a downward direction while everything else is going the way that it's supposed to be, guess who's going to be buying tech? Me. If tech is rallying and the blue chips are, 10+% off, guess who's going to be buying blue chips? Me. Anyway, that's my approach. Unfortunately, I cannot teach you or show you how to make $250,000 in profit because I have yet to do so. I can, however, explain to you my strategy when it comes to taking the contrarian approach and going after what a lot of people are not paying any attention to, what's off of most people's radar, or what a lot of people are afraid to be buying into at that time. There's a lot of different ways you can go. And I have found that during bear markets and recessions are when the millionaires are made. So maybe I can't explain to you, or maybe this video doesn't cover how to make money during bear markets and recessions, but give it a little bit of time. I'm pretty sure we will be able to reference back to this video and say that's how to make money after the bear markets, after the recessions, after the inflationary times. What do you do during those times? What action do you take during the tough times that lead you to success? I personally believe I'm taking all the right steps. Time will tell, but I've been doing this for a couple of years now, and it's been working in my favor tremendously. So that's all I really have to say about that. I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. When it comes to taking the contrarian approach, is that what you do, or do you more so follow what everybody else is doing? Maybe you don't have your own strategy, or you don't know how to analyze stocks, or you don't know how to crunch the numbers the right way, so you just take a look at what everybody else is doing and say, hey, yeah, that seems like a good idea. Shut up and take my money. Head on down to the comments and let me know. If you guys like today's video, please hit that like button, subscribe if you're new, subscribe to my second channel, which is my backup channel for exclusive weekly content. Go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. Over 50 different flavors to choose from. This one's Bahama Mama. I definitely recommend it. It's one of my favorites. And of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. If you refer a friend, by the end of the month, aka by midnight tonight, Webull's going to give you 30 free fractional shares. And for every friend you refer after that, until midnight tonight, they're going to give you 15 free fractional shares per referral. These are some of the most rock-solid companies on the planet: Ford, Coca-Cola, Starbucks, Apple, the list goes on. And if you refer 3 friends by midnight tonight, of course, Webull's going to give you between 1 and 15 free shares of Apple. You're guaranteed at least 1, but you have the opportunity of winning all the way up to 15, and you only have until midnight tonight to make the most of this opportunity. Please, for the love of God, do not pass this up. Webull link in the description. If you don't want the stocks, go and get them anyway. They're free. Why would you not? Take them, sell them, take the cash, and buy what you actually want to have. Link in the description. And I want you guys to head on down to the comments and let me know one more time, what are your thoughts on everything shared in today's video? When it comes to investing for the long term, what is your approach? Do you follow the trend? Do you follow what makes the most sense to you based on what's happening in the world, or what's happening with the country, or what's happening with the economy? Or do you do what I do, which is take the complete and total contrarian approach? Wherever the hype is, that's where you want to stay away from. That's what I do. I'm not instructing you what to do because I'm not a financial advisor. Nothing I've ever said in any of my videos should be considered financial advice, because that's absolutely not what it is. I'm just documenting what I'm doing. I'm documenting my journey. I'm documenting my wins, my losses, my successes, my failures, and I want to hear your thoughts. So head on into the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.